everything started to crash, we were selling a lot of portfolios. So we were selling 10, 20, 30 properties at a time. We had a deal. We had it already approved. I think they offered us $7 million. We had it under contract for 6.7. So we were going to make $300,000 on it. At the last minute, they paused buying because interest rates. Mm-hmm. So just like that, we lost $300,000. So it's only because the seller dragged his feet for 30 days. If he would have signed 2 weeks sooner, we would have closed on that deal.
Hey there, Jack Bosch here with the Jack Bosch Show, and I'm super excited to bring another guest podcast to you today. Our guest is Victor Heredia, and he's a big wholesaler in multiple markets in the United States. And well, let's jump right into it. He has done wholesaling, he has done wholetailing, he's done fix and flip. He does it all virtually. So we're going to talk about virtual real estate investing in the housing section, not land this time, in the housing section. So with that said, welcome, Victor.
Thank you, Jack. Appreciate it. Good to be here.
I'm excited to be here. So let's just jump right in and let's start right away. Give us a little bit just of your background. Just tell us who is Victor and why are you here and what have you done and what's your background and what's your story? Let's just jump in there.
Well, my background is in the food business. I was in the produce business for quite a while, since I was 25. I did that. I worked for a family business. My family, they're farmers in Mexico. They grow up bananas and some other items, but mainly organic bananas. Then I had my own produce company. Then I worked with the family again, and then got into real estate. So that's my background primarily. It's
okay. So what? So first of all, if it's bananas, your family must be in southern Mexico, right?
Southern Mexico, yeah, down in Colima, correct.
All right, very cool. Well, my wife is from Honduras, which is only not that far away from there, just a couple of countries. So you're in the family industry. Obviously, that's a big industry. I think your family doesn't run a small company.
It's a pretty big company. I think 2,000 to 3,000 employees. It's a pretty big company.
Right. So what made you break ranks with them and go somewhere else, do something else?
Just seeing their success, being owners. And you just see family members that are doing really well, having a great life. And not that I didn't have a good life, but I wanted a better life.
Right.
And so you want to aspire to more and do more and achieve more. And to have them as an example, my cousin was a great role model, a great mentor, and seeing what he did, just kind of like, hey, I want to do it for myself. And that's kind of why I took the leap.
That's cool. So in short words, basically there wasn't like an equity position way for you to make your way into ownership of that company?
No, because it was a family business. It was his family, his immediate family. I was a cousin. They paid me well, but I didn't have equity. And to be honest, in order to achieve big things in life, you have to have equity in a company.
Absolutely, you do. Absolutely, 100%. Cool. So how did you come across real estate? I always ask that question it's the most curious way people hear about real estate.
So I've always been interested in real estate. So in 2008, I worked for a couple of wholesalers, but at that time we didn't call it wholesaling; it was called flipping. It was flipping. I worked with them for a while, and they're here in town. A guy named Bob Gomez and Dave Jacobs.
And here in town means, by the way, Phoenix, Arizona. I'm in the Phoenix area. You're in the Phoenix area. Victor is in the Phoenix area. So the Phoenix area. Okay.
Yeah, correct. And that was in 2008 before the crash. So everyone was upside down. So it didn't really work out. There was no equity. And so after that, I started my own produce company. Then I worked for my cousin again in the family business. And I've always gotten the real estate bug. And I saw, and I've told this story before, it's just kind of interesting. I saw Ty Lopez. Mm-hmm. He was interviewing a young guy, Jalen White. And he was 18 years old, making $100,000 a month. And I'm like, okay, let me find out about this. That's what's going on with this. And that's kind of how I heard about wholesaling.
It's incredible how often that you just hear one story that just connects with you. Yeah. That makes all the difference. Right? That's why when we put our student stories out there all the time, because it's like the single mom, the single dad, the former waitress, the 18-year-old, the 21-year-old college student, the 18-year-old high school student, the truck driver, the medical doctor. The thing is just different people speak different to different people. It's like you hear somebody, well, that doesn't relate to me, but then somebody else, ooh, if they can do it, I can do it. Boom, right?
Well, I think for me, my background, you just think they have so many more years of experience and knowledge, and that's why I'm not there yet. And that's what you think a lot of times, right? And then you see this kid at 18 years old making $100,000 a month. Okay, that's not it. There's a strategy. And so that's kind of what impels you to like, okay, let me seek this out, which is what I did.
Awesome. So then you went through one of Ty's programs.
Yeah. So I ordered that program, and then I also found out like because I just knew like he learned it from someone. Not to take away from him. I mean, he's super smart. You know, and he's super successful in other businesses, but I knew he learned it from someone, and so I tried to find out who that someone is, and it was Sean Terry.
Okay.
So then I ordered Sean Terry's course, and I just studied that for 3 months straight. Even my wife was like, "Shouldn't you just start to implement?" I'm like, "No, I really want to learn the business because if you know it well, you know you could achieve results quickly, which is what I did."
Wow, you have a lot of standing power. You have a lot of stamina because most people, from our experience, if they buy something and they just study it for 3 months and don't take any action, they'll never take action.
Yeah. For me, it was strategy. I wanted to understand the business because I know me, and I think a lot of people are like that. If you don't have an understanding of the business, you're going to be trepidatious, right? You're not going to want to take action. So I knew I wanted to learn it inside and out. Which once I felt that I had that, I'm like, okay, I'm moving forward. And even at that point, when I had a deal, I had to call Carlos. By that point, I knew Jalen was friends with Alex Saenz. I reached out to Alex, and then I reached out to Carlos Reyes. And Carlos Reyes, back then, he used to get back to everybody. He's a great guy. And I'm like, hey, I got this deal. Is this a deal? He's like, yeah, that's the deal. Lock it up. So I went to see a couple. They were in foreclosure. We were able to get under contract. And Carlos and Sal were able to flip it to an investor, and we made, I think, $22,000 on it.
All right, congratulations!
Yeah, it was good.
Yeah, you ever going to remember that first one?
Yeah, of course. Yeah, for sure.
You'll have, no matter what, you'll have a visual from it. You know the thing, you know the dollar amount, you know the exact story.
Exactly.
And it'll never go away.
Exactly.
Same for us here.
Yeah.
Very cool. And Carlos is one of our show guests here too. So I know, and Sean is a good friend of mine. We all kind of know each other after a while, right? It's kind of a cool. small community where most people know each other.
Yeah.
Good. So then that gave you the first $22,000. What did your wife say at that point?
Oh, she was excited. We went to celebrate at the Venetian. We stayed at the Venetian for the weekend, had a nice dinner. So it was a lot of fun.
Very nice, very nice. And that's what you should do. Like I appreciate I love that. It's not just, next. Sometimes you got to also stop and just celebrate.
Well, you got to celebrate your wins because then you want more wins. So psychologically, it's pretty powerful.
Exactly.
Like even now, when we get a good deal, we'll go have a dinner. Do something nice because it makes you want to do more.
Yeah, I agree with that. As an entrepreneurs, we often fall into that. Okay, what's next? Okay, done that. Next thing. So sometimes we have to stop. Very good. So, what happened after that deal? How did that first deal change you, or did it change anything, or what is like? When did you put the pedal to the metal on this?
Well, business? It took me some time. So I kept wanting to do more and more deals. Because at that point, I realized like to have a better life, I had to start my own business. But, it was part-time. I was doing it part-time. And I didn't want to, leave a secure job without some money in the bank. So I wanted to make sure I had some money in the bank. So I did a few more deals. I kind of focused on doing a few deals until I was able to hire someone else to help me. And so I just started doing deals. I was doing my own cold calling. I was doing my own acquisitions. I was doing everything for a while. And then it got to a point where after every deal I got, I'm like, okay, I need a team. So then I hired a caller. And then I did another deal, another caller. And then so I started scaling up my callers.
And how big is the team now?
Right now, there's 10 of us, so it's not that big. Part of that is because we're doing more PPC. So I think having a big team is great if they're all commission, or if you're selling the hedge funds, which we were for a while. Back then, we had a really big team. We were up to 25 people at that time.
And we'll talk about both the hedge fund and the PPC in just a second.
Yeah.
I quickly want to start. So what's your typical deal at that time? What was the typical kind of deal that you did? Like wholesale? Was it wholesale or was it fix and flip? Or
no, it was at that time when I started, it was just wholesaling. And we were focusing on foreclosures. Like that's what I did in 2008. And so that's kind of what I knew. And everyone says, well, foreclosures right now.
And what year was that then?
That was in my first deal I did in 2018.
18, okay. Wow, so there's foreclosures. I mean, there's always foreclosures. We know that, but perhaps the audience doesn't. There's foreclosures in every market.
Yeah, correct, yeah.
Even though the market at 18 was doing fine, and there's still people who lose their properties
Correct.
for one or the other reason.
Exactly.
Do you remember that deal? Can you walk us quickly through that deal?
So that first deal, it was basically I was going to work with some other guys, and I know they were doing deals. It kind of motivated me to get a deal done. And I was persistent on the phones. I just wouldn't stop calling until I found someone. And so I finally found someone, and it was a couple that were, pretty distraught because they're in foreclosure. And I went to the house. I set up an appointment, went to the house. I talked to them. I told them the process. And they liked it. They liked what I said. I guess they trusted me. And we signed the contract that very night on the same visit. And that's when I went to Carlos and Sal's office, and they dispositioned it. And that was how we got started. And then after that, I just started doing more and more deals.
Where do you get the leads from? Where did you get the
At that time, it was List Source.
Okay, so you got a list from List Source of mortgage foreclosure delinquent people. You called them, got their phone number, called them, talked to them. Then they invited you. Said you set an appointment, went there, like the typical kind of process. But let's quickly walk it through it. Negotiated with them. You know what price to offer. What was the house worth after repair? Do you remember? Back then,
I think
different numbers today.
I think it was worth probably, I'm thinking $250.
Okay.
Yeah, and I think we got it like a 110, 120. Right. I think it was. I don't recall exactly.
And they owed,
and I think they walked away with like 30, 40,000. They did okay. They did okay. Yeah, and that's the thing with us. We always want to make sure whoever we're dealing with, they get money in their pocket.
That's cool. So they probably then had a $90,000 mortgage still.
Yeah.
That for any reason or the other just could not pay anymore.
Correct, yeah. Right. I think the husband had lost his job is what it was.
No, so then you turn around and then you didn't sell the property because in this case, you didn't have the network yet, I assume. And instead you went to Carlos, and Carlos, as a exists Carlos Reyes, also on the show in a previous episode, Carlos has the network.
Yeah.
So he turned around and sold it, and then you guys split the profit and so on.
Correct. Yeah. Yeah.
Okay. There we go.
Yeah. That was it. And I think that's how, when you're first starting, that's how
most people start.
That's how you should start, because if not, you're never going to get a deal done. It's a little challenging if you don't know anybody. Right.
If you don't know anyone, most people, that's where people get hung up a lot. They think you need the buyers and the sellers, and whether and now it becomes overwhelming because you can't imagine finding a house, but then how do you sell it? And that's when you partner up with other people.
Correct.
And because they have it. And then over time, you build up your own group build up your own list of buyers, and soon enough you get to keep the deals and no longer have to farm them out, right?
Exactly. That's exactly it.
Let's fast forward to 2021, you started selling, you had a team of 25 people and selling to a lot of the hedge funds.
Yeah.
Right.
Yeah. So the way that worked, actually, I had a deal that I got under contract in Austin, and it was a good deal. Austin's a good market. So I started looking for buyers in that area, and I saw a buyer that had 23,000 properties.
Okay.
So it's a big company. And I'm like, who are these guys? I'm like, that's insane. Like 23,000 properties. That's a big buyer, right? And so I reached out to them. I found out who they were. I reached out to them. It was Amherst Residential that everyone knows of nowadays. And just called them. I called them at that time, I don't think they were doing a ton with wholesalers at that time. So I just kept calling them for 3 months straight. And they finally put me in touch with their buyer here in Phoenix. His name is Joe. And just started talking to him, and we just started doing deals. I started sending him as much as I could. Other friends were sending me deals, so we were just doing as much business as we can, and that kind of is what kind of got the ball really rolling, and we ended up scaling to 20, 25 people total. Most of them cold callers.
Yeah. So let's roll that up. So for also, not everyone listening here knows necessarily what does a hedge fund do with houses. I mean, I know if you follow the media and thing, you're probably involved, but if you're brand new, you don't know that what's going on there. So who are these hedge funds, and why are they buying houses, or why did they buy houses?
So basically, it's hedge funds that are buying properties, and they're being financed by companies like BlackRock, Blackstone, Goldman Sachs, and it's a new asset class for Wall Street. So they're buying as many properties as they can, and that's been their focus for the past few years up until recently.
Yeah.
And so
basically, Wall Street 2008 realized that there's money to be made in real estate.
Yeah.
And beyond, they always made money in real estate to their REITs, like the real estate investment trusts. Yeah. But the real estate investment trusts traditionally focus on more commercial and multifamily and those kind of things.
Yeah.
Now, all of a sudden, Wall Street realized that they can buy houses cheap, rent them out, and there's appreciation. Plus, they get money dirt cheap. So they started buying millions of houses all over the country. And at some point of time, while there was a foreclosure crisis, a lot of banks would just give them the houses for cheap. Mm-hmm. But as that kind of inventory went away, you guys stepped in and fed them houses.
Exactly.
Right.
Exactly.
So how was that process? Did they pay good money? Was it difficult to work with them?
No, it was pretty easy. You would submit the property, they would give you a bid for it, and then if it worked, we would sell it to them. And if it didn't work or the price was too low, we would go back and renegotiate with the seller. But that was the process. We would just submit the deals to them, and they would give us a buy price. So it was really easy at the beginning. As time went on, it got more challenging, more competition. They kind of changed their structure. But in the beginning, they're very, very.
Plus,
aggressive.
Wholesalers are smart people, and if one of them doing it, and word gets around, all of a sudden, everyone's pushing their properties to that hedge fund buyer.
Yeah, exactly. Well, I think at one point in Atlanta, 42% of sales in Atlanta were to investors. So that's a lot.
That's great. Yeah. In Phoenix, it was all usually around in the 25-30% range, right?
Yeah. But Atlanta was pretty aggressive.
Pretty aggressive. Cool. Yeah. So now that stopped right now, right? As interest rates skyrocketed and prices started stagnate and then start falling, most hedge funds stopped buying.
Correct.
So how has your strategy changed since then?
So when I first started, I was hitting motivated data. So I was hitting probates. I was targeting out-of-state homeowners, absentees, and foreclosures. And so now we just went back to that. So you have to go after motivated sellers. So we're just looking for motivation again. Tax defaults, liens, foreclosures, probates. That's kind of what we focus on now. There's not enough of those in one market, so we hit multiple states that we like in order to have enough data to really make a difference.
So let's bring up the virtual world here a little bit. So that makes total sense. Of course, if you want to run a certain volume, one market might not bring enough deals, so you add different markets, but how do you deal with, this is still a house. Now that's different from land, right? We flip land. We call it land flipping, even though it's really land wholesaling, what we do too, and land seller financing. And we always say that simpler than house flipping or house wholesaling because there's no tenants, toilets, termites, and we don't have to estimate repairs.
Yeah.
You guys have come down with a formula for estimating repairs, or you still ultimately got to get boots on the ground that go inspect the property before you make a final offer?
Well, before it was like 65 cents, 67 cents on the dollar was about where you need to be at, and people still use that formula. But as I started dealing with more and more buy and hold guys and just more sophisticated investors, I kind of figured out a formula, and so I created a calculator, and Carlos Reyes uses one also, but I created my own that kind of tells me, what the closing costs are, what their hard money costs are, what the rehab costs are, and then what my profit would be. So we have a calculator now that really.
But the rehab cost, how do you find that out?
What cost?
The rehab cost.
It depends on the property. If it needs a lot of work, we figure $35 a square foot. If it's so, we figure 15.
But how do you know if it needs, I'm trying to dig here a little bit.
We do.
How do you know if it actually needs a lot of work?
So when we get under contract, the first thing you do is we send an inspection company. Okay. So we send a company out there to take photos of the property and just get them to really take 40, 50 photos. And one, it lets us know the condition, but two, it helps us to sell the property.
So you basically turn the process around. Back, what most wholesalers would do is they would go meet at the property with the sellers in the kitchen table, walk around and basically make their little notes. It's like, okay, need a full bathroom replacement, need a full kitchen replacement. We need landscaping, we need this. And then basically in their mind, if you're experienced or if you're studied, this is 10 grand, this is 5 grand, this is 35 grand, this is 25 grand. And you add it up and you basically like, okay, this is a big rehab project. So therefore I need to be ending up here versus here. You guys just use a sophisticated formula.
Correct.
And then once the inspection company comes in, that is either validated or it's better than expected, then you have basically make extra money.
Yeah, so you make extra money, or you have to maybe renegotiate.
Or you have to renegotiate. If it's worse than you had expected and there's more things to do, then you go back and renegotiate.
Yeah, and the reason is when you're talking to someone that wants to sell, the market is so competitive. There's so many wholesalers in the business and investors. You want to get under contract. Right. Because if you don't, someone else is going to get under contract. So you just want to get under contract and then take it from there.
Right.
You have to be aggressive.
Once they're a little bit emotionally invested and once they're down the road for a few days and they're like, okay, so you're doing something, they don't want to jump ship to somebody else. They just potentially rather give you a little bit more discount.
Yeah, and then that time frame allows you to build rapport with that person as well, which helps.
Yeah, absolutely. Rapport is huge.
Yeah, totally. Without rapport, there's no deals.
Yeah. Absolutely. So now, how do you get the contracts done? Do you send somebody there, or is this now done via Zoom?
No, so we send it via DocuSign. So we send a DocuSign, and we get DocuSign signatures. Now, if someone is older or they don't have access to computer, etc., we'll send a mobile notary to get the signatures at their house.
But the actual negotiation is done over the phone. Over the phone,
yeah. And sometimes too, I have my guys just do a Zoom. Do a Zoom call or FaceTime, whatever works. I really like Zooms because it helps you build rapport with the person on the other side.
So now, how has the market changed today? Obviously, you're not 25 people anymore. You have 10.
Yeah.
How did you have to adjust to the market conditions right now? And then going forward, what do you expect for the market to do? But more than anything, like we had this big run up and all of a sudden, middle of 2022 comes in, interest rates, or early middle of 22, interest rates skyrocket, demand goes down, prices turn around. How was that for you? How was that experience?
Yeah, well, really, I mean, the last couple of months of last year were pretty bad. I mean, we took some pretty big hits, a lot of cancellations, a lot of deals that just didn't close. So you just have to adjust. I did see it soon enough. You start to see, like, when the funds are paying 85, 90 cents on the dollar up to 100% of value, and all of a sudden their offers come in at 65 cents on the dollar. They're like, wait, what's going on? And it was just because interest rates really affected the market, especially them. And so we just adjusted. I'm like, okay, we got to go to motivated data because we weren't greedy. And most people did the same thing. Like, the more the funds pay, the more we could pay. So because we want the deal no matter what, because if a fund could pay us 95% on the dollar, I'm going to try to get it cheap, but if I have to pay 85 cents, I will. So will the next guy. So it allowed us to pay more for properties, which was great for the homeowners at that time. But now, when a lot of buyers are out or they're buying at 65 cents on the dollar, now we have to buy cheaper. The only way to buy cheaper is to buy properties that are really distressed or motivated. Mm-hmm. So that's kind of the focus right now.
Yeah. How long did it take you to readjust to the new world?
Well, basically, we went back to the old ways. So that's basically what we did. And as soon as I saw offers coming in low from the funds, that's when we okay, we got to start pulling different data. So we did it pretty quickly. It's still the problem is, though, even if you implement new data right away, all the data that you've been working on, it's there, it's in the pipeline, right? So it took a while for it to kind of shift.
No, absolutely. No, but kudos to reacting quickly, because I'm part of a mastermind with actually, you might be into Collective Genius.
I've heard of it. Yeah.
I think anyway. So I'm part of a mastermind. There's like 200 house flippers in there, and then there's like 50 of us that do other stuff. Yeah, like do multifamily, land, all kinds of other things. And I've been part of that group for like 10 plus years. Oh, wow. And when the last time the market shifted, I think a lot of people shifted too slow. Mm-hmm. A lot of people lost their shirt because they kept saying, oh, no, that's just a hiccup, and just kept going, and all of a sudden lost a lot of things. Yeah. In this market, kudos to you. You shifted quickly, shifted fast, shifted decisively, and that's what it takes. Yeah. Right? No, congratulations.
Yeah. I think it's a pattern recognition is huge. You have to recognize the patterns. You have to see the writing on the wall. As soon as you see, like, hey, we already got 3-4 deals that are going sideways, like, what's going on? And then but I already knew, like, because I like to study finance as well, and Wall Street, I trade a little bit. So I already knew as soon as interest rates are going to start climbing, when interest rates are low, assets climb. when and interest rates are high, assets decline. Right. So I already knew that. So I knew it was coming. Even when Zillow, I think they lost, I don't know, $500 million or something. They lost a ton of money. My friends were like, oh, okay, well, supposedly they said the funds were like, oh, great, we're going to go after all their properties. I kind of knew, I'm like, no, it's going to happen to other people. Yeah, because it's a trickle-down effect. It happens to one big guy, it's going to happen to the rest of them, and sure enough, that's what has started happening.
Yeah, it's like seeing that and being able to, or like really paying attention to the market is incredibly important. I mean, we even in our coaching side of the business, we want to share the fact that we flip land with like as many people in the world as possible. But we also know, I also knew, again, we've been teaching this since 2009 or 2008 actually. That right when the market crashed, when we went into the teaching, because land flipping kept working through the recession, but we realized that the moment the media starts talking about real estate going down and real estate being bad, that's when everyone runs for the hills.
Correct.
But well, that's why, like early in 2022, we started setting up our social media presence because we needed to make sure we can reach large amounts of people to wake them up to the realization that it's the opposite. You need to get into real estate when everyone else to stay out of real estate. Because, like when real estate is down, well, that's when you get bargains. Like 2008, 2009, America was for sale.
Well, even in stocks, I mean, you want to buy when there's blood in the streets, right?
You want to buy low and buying. Everyone goes into the stock market when the stock market is high, when there's a lot of hype. Oh, record. Yeah. When they really should be the opposite. That's when you get out of the market.
Exactly.
You get in the market when it's low. So now is the perfect time to get into real estate. Yes, it's harder sometimes to make money, but it's way more predictable.
Yeah. You want to be a pessimist when everyone is an optimist.
That's right.
And vice versa.
Yeah. So you also started a coaching business, actually, right?
Yeah.
Tell me about that.
Me and a friend of mine, his name is Michael Martinez. We started, it's called REI Moguls.
All right.
We just launched it about 2 months ago. So just doing coaching for people that are already more experienced in the business, that are just looking for tips and tricks and insights on how to scale their business.
Very cool.
So that's kind of what we're working on. And our goal is to everyone that we have as a client to get them to do, minimum 40 to 50,000 a month is what the goal is.
And exact as I just said, the timing is perfect right now because it's counterintuitive. It's like, why would you start a coaching business when a real estate business is on, when the masses are running away from real estate? No. Because that's the time to get into real estate. Yeah, like that's the time you need to be in there. People are like sometimes like lemmings, like following following everyone else. Now, right now, when prices are down, right now with interest rates high, right now if somebody loses their job and they just signed a loan or they bought a house 2 years ago, guess what? They need to sell that thing, and they still got equity to sell it. Yeah. So, but their distress, their need. And with you guys and your experience and your scale that you guys have built, that's I can totally understand how that's something that has a lot of demand.
Yeah, and we're seeing a lot more foreclosures now. There was I guess a lot of forbearances. Banks weren't foreclosing, but they're starting to foreclose now. So we are seeing more of those.
Yeah. Now I talked to a gentleman not too long ago, middle of last year actually, in the middle of 2022, and he mentioned that foreclosures had already gone up from a very super low level. 700% from a super low level. Sounds like it's a lot, but now I'm sure this year they're even higher.
Yeah, they're picking up more.
Because there's layoffs and things are happening and people quitting their jobs and not necessarily thinking about it.
But also too, the way we see it, because we talk to some of these funds still, and they tell us like, we're just waiting for the bottom to hit, and they're going to come back strong. Like the rumor is that single family is a new asset class for Wall Street.
Yes,
and they're going to buy everything under 350, maybe even under 400. Yeah. So they have a very big appetite for single family homes now. So I think it's a perfect time to get into real estate, single family, even land. There's a lot of demand for land as well.
Oh yeah.
So I think now's really the time to get into it, because now that Wall Street wants to get into it, you want to go where the money's at, right? So now I think it's probably one of the best times to get into it.
And yes, Wall Street has pretty much unlimited funds.
Yeah.
And Wall Street is not easily scared by something like that. They made money for 10 years right now, they made money from 2009 when they got into it to 2022. They're just hanging out for a couple of years right now with just waiting it out, managing their hundreds of thousands and millions of properties. And as soon as we hit a bottom, they're right back in. As long as the numbers make sense, they'll keep buying. So this strategy will keep working.
Yeah, I have a friend of mine that worked with a lot of funds, and he was telling me that the funds are green light, red light, green light, red light. There's no yellow. They don't slow down. They either go or they stop. And now they're raising funds from all over the world. We had one property that we sold to a fund. The end buyer, the person that actually sent the funds in, was a corporation out of Japan.
Oh wow!
Yeah, it was pretty interesting. So they're raising money from all over.
Very cool, very cool. So what's the future for you? What's the plan right now for the next few years?
So to do real estate, we do think the funds are going to come back really strong, and we enjoyed working with the funds. We had good relations with them, so that's the plan. We were selling before everything started to crash. We were selling a lot of portfolios, so we're selling 10, 20, 30 properties at a time. There's a friend of mine here in town, Rafael Cortez. We had a deal, it was like 70 properties.
Spoke to him last week.
Yeah, we had like 70 properties. And then we narrowed it down to 31, and we had it already approved. I think they offered us $7 million, and we had it under contract for 6.7. So we were going to make $300,000 on it. At the last minute, they paused buying because interest rates. So just like that, we lost $300,000. So it's pretty disappointing. But we expect them to come back pretty strong, so we're excited. Like, I think once the market really hits bottom, which I think might be in 8-9 months.
Did you buy that portfolio, or did you let it go?
No, we had to let it go.
Okay.
And it's interesting. It's only because the seller dragged his feet for 30 days. If he would have signed 2 weeks sooner, we would have closed on that deal. It was pretty sad. Yeah.
Sometimes there's the seller. I'm sure the seller is sad too.
Yeah.
Because he probably had to piecemeal it and sell it off, or sell it for a much lower price.
Yeah, exactly.
Later.
So we did tell him to hang on to it. Maybe in 8 months we'll be able to make him a good offer again. So we'll see. But I think that's going to come back. So I think it's going to come back. It might be 8 months, might be a year. I'm not too sure. What are your thoughts?
I do think I've learned from the last recession. But in the last recession, we bought not a large portfolio, but about 45 houses for us as buy and hold.
Yeah.
And we anticipated that the market would hang out way low for several years because it was such a massive crash, and it looked like this. And the mother of all recessions,
it was pretty bad. That's
mother
true.
of all downturns and everything. We expected that to hang out forever at that level, but then no, it took like 2011, 2012.
Yeah.
It just basically 2 or 3 years.
Yeah.
And it just popped, and it just started racing up like that. Not the least driven by the hedge funds again.
Yeah.
But prices started doubling in Phoenix in a matter of like 2-3 years or so.
Yeah.
I was like, holy crap, should have bought way more. Well, should have, could have doesn't exist. But what I see is there's with the money the government threw at people, and yes, they're trying to suck it back out to higher inflation rates and things like that right now, and to higher interest rates. There's still a lot of money circling the globe.
Exactly.
And that money is looking to be placed for somewhere with a return.
Yeah.
And the Wall Street has woken up, and institutional investors have woken up to real estate. And so I think they're just sitting at the edge, and they're just waiting for this to level off.
They are.
And the numbers to make sense and to come right back in. So I 100% agree with you. So I would think it doesn't take more than 8 months. So let's say perhaps into the middle of 2023, if that much. The middle of 2024, the latest. And I expect this to have fully leveled off and probably taking off again.
Yeah, I don't think it's going to get as low as it did in 2011.
Oh, no. I mean, about 30%.
We wish, right? We wish, but I think that's...
Personally, I wish for it too.
Yeah, exactly.
Like I go...
Yeah.
Take all my money, raise a bunch of money, I go shopping like crazy. But it's markets like Phoenix that actually already have declined 20-30%. Yeah. They might, I think, do another 10%, and that's it.
That's funny. It's interesting. I told my cousin that at that time I was working for him, I'm like, cousin, you got to buy some houses in Phoenix. They're like $30,000, $40,000. They're super cheap. He's like, really? I'm like, yeah, you should buy them. He's like, yeah. And then I think like 4 years later, he's like, remember you told me I should buy houses in Phoenix? I go, yeah. He goes, I told that to a friend. He bought like 25 houses when I told him that, and now he's retired. I'm like, yeah, I told you should have bought 2 houses. So, yeah.
Yeah, we bought a bunch, and luckily we still hold a bunch of them.
Yeah.
So they have added
That's good.
a really nice amount to our net worth there, and provide tremendous cash flow.
And then you can sell them now, but I think in 5 years, it'll be worth more money.
Yeah, no, these are
So
buying
there's no reason to sell them.
Yeah, we bought them in different markets. We actually stopped buying in Phoenix, then went to other markets where they didn't have as much appreciation. But again, you never know.
Yeah.
But we did well in all markets.
Yeah.
But they're just held for appreciation.
Yeah.
Now back to my question. What's the plan? Where is your company going to grow? What's the future plans? Are you going to stick with wholesaling, and this, or are you going to go into other areas of real estate?
No, so
what's the plan?
So the idea is to scale the business. So right now we are virtual, so everyone works from home, which is really nice,
which is cool, yeah.
And I like it because in being from the corporate background, I knew and I know that your operational costs will kill you if you're not careful. They'll put you out of business, right? So I always like having a really low operational costs. But I also understand if you want to build a team and a culture and a big business, you have to have an office. So we're shifting to that, and we want to hire more salespeople to get more deals in, and maybe do a bigger profit sharing, like do a 60-40 split, where they get 40% of the deal, straight commission, so they can make some great money. So we're going to be doing that. I started a collection agency with Mike Martinez as well, my friend, my partner in the coaching business, and so that's going well. And we just got into solar. Solar is a big industry, and it's something that you could sell. You can't sell a wholesale company. Solar business you can sell. So we got 4 partners in that business, and we just launched that about a month ago. And it's already going well. We've already gotten like 25 sales since we started. So it's
Are you
really,
doing also installation, or are you doing most of the sales?
Just sales, and then you partner with an install company.
Well, it sounds like that's a natural fit because you're good at sales.
Yeah. The marketing and the sales side, that's kind of where it's at.
Yeah,
totally.
Cool.
Yeah.
So one last question that I like to do with my guests is that, what do you do with the money you make? Like how do you invest money? What do? You pile it up? Do you invest it?
Yeah.
You go spend it? I mean, what do you do with the money? So
right now I'm shorting the stock market.
Okay.
I believe we're heading to a stock market crash. It's my thoughts. I follow a lot of guys on Wall Street, the consulting firms. There's a firm called Hedgeye that I follow.
Okay.
So I think there's a crash coming, and so I'm shorting the market right now. And if that happens, it'd be a pretty big payday.
Right.
And then with that fund, that money, I'll probably do more trading and also invest in
so
more real estate.
you put a lot of your money into the stock market.
Yeah. Okay. I'm kind of taking a risk.
Actively, or do you just invest in some mutual funds and things?
No, active.
Actively.
Yeah.
Okay, that's good.
So, but it's more shorting the market. I'm not expecting it to grow much. Right now, we're in a bear market rally, but I think there is a crash that's going to come.
So the reason I'm asking that, because this is the Jack Bosch Show, and we talk about finance and real estate. So the real estate part is what takes on a lot of our show, but that shows you how to make a bunch of money. So I'm always curious, particularly financially very smart guys, business savvy guys like you, what they use the money for and how they apply it. So in your case, you're shorting the market, you're investing in the stock market. Which, nothing wrong with the stock market.
Yeah.
I personally am not in the stock market much. Every time I invest in the stock market, I lose money.
Yeah.
So I was like, after the 8th time, I was like, okay, let me stay out of that thing and let me do what I know best, which is real estate. So, but really cool. So shorting the market. Any other investments that you do? Do you have build up a portfolio of real estate or anything?
So I ended up selling everything that we did have some properties. We sold everything because we do see properties dropping 2% per month.
Right.
But I do think the market's going to hit the bottom in maybe 8-9 months, maybe a year, who knows? Mm-hmm. And so we are this year. I already talked to my capital partner. We're going to build a portfolio of properties. So that's already in the works.
Very cool.
Yeah.
If somebody's watching that is like interested in real estate, interested in making money, interested in standing on their own 2 feet, what would you tell somebody a beginning investor about how to go about it?
Well, I think it comes down to knowledge and connections, right? So I think there's a lot of courses out there. We have a course now. Sean Terry's course is great. All In guys have a course that's great. I think if you really want to build a business and you want to build a business to change your life, I think you have to invest in your education, right?
Absolutely.
So I think, you have education as well. I think that's critical. You have to invest in education. If I get a lot of guys that call me, they're like, hey, I got this deal, and they're selling that to me at 10,000 below market value. I'm like, dude, that's not a deal. Like, you know, and then you talk to them and you realize they don't have a clue about, I mean, they're putting out the work, they're hustling, but they don't have a clue about the business because they haven't bothered to educate themselves. And I've had more than one conversation. I'm like, guy, get a course, educate yourself, learn the business. Have you done that? No, I haven't done that. I'm like, dude, you got to get $500, $1,000. Just get a course, educate yourself, get it on YouTube if you have to.
Yeah.
Educate yourself, and then start the business. And then number two, reach out to guys that are doing well in the business and offer, hey, let me help you find deals. Let's work on deals together. You know, we'll do a 50-50 split. Like, do that as well, which I did both. I think that's the key. I think that if you do that, you'll be successful. If you don't do those two things, I think it's going to be really hard to achieve success.
And that's why in this particular case, that's why I asked Victor to actually lay out the simple steps exactly of how it works, so that if this is one of the first sessions that you watch about real estate, well, right there, you got a little bit more knowledge.
Yeah.
The other thing, though, is I want to add up, it's work. It is a lot of work, like anything worth doing in life, right? So you got to be not afraid to work the phone. You got to be not afraid to meet people. You got to not afraid to actually, you got to put some hours into studying, right? It is work. But you know what? Where there's no work, there's usually also no reward.
Yeah. And also, too, I think that, like, to end on that note, I think sometimes if you're not putting in the work, I don't think it's because people are lazy. They just don't have belief that it'll work.
Yeah.
Like, they think, like, I'm not sure this is going to happen. So they don't take the action.
You know, that is a perfect thing to say, because right at the very beginning of our podcast, you talked about you spending 3 months studying and not taking action. Mm-hmm. And I was blown away by that, because that's what is usually, that's a kiss of death if you do that. Like, it's, if you just study and never take action, it requires a lot of conviction that it'll work.
I already knew it was going to work.
That.
Exactly. So I was convinced it was going to work.
Okay. That's a different thing, because you know people, you have seen it work. So now you're so like, okay, you know what? I'm going to look at it more like a preparation of 3 months, and then I take action. And that's a good way to look at it, because a lot of people, they like, I studied 3 months and nothing's happened. Well, how many phone calls have you made? None.
Yeah, exactly. And I believed I can make it happen.
Right.
Like, that's the key. You have to believe it's doable, but you have to believe you can make it happen. I think that's critical to success as well.
Absolutely. Yeah. So great thing. Get in with somebody. If you don't have that belief, the one most important thing I could say to that is then go ask to help somebody who is already doing it, so you can build the belief while you see it being done in action. You might shadow somebody for a few days or for a couple of weeks, and you see them pulling in deals, and you learn from them. And soon enough, there's no other way other than you believing that it's actually possible. And you start picking up skills, and then you start realizing, oh, it's possible for me. And soon enough, because there's different people. There's people that just like watch it and they're like, I know it's possible. Is it possible for me?
And I think the reason why most people like that probably start your program, and I'm sure you get some people, oh, it didn't work. It usually is because they didn't believe it would work, so they didn't try hard enough.
Yeah, that's why we've been in our coaching program. We put like incredible amounts of accountability and things like, okay, and extra sessions and things. Let's do this together, and let's do this next step, so that they have what we call micro successes.
That's great.
Like one little success after the so it builds up that self-confidence.
That makes a huge difference, because if you don't believe it can happen, you're not going to take the action.
Yeah, exactly right. Give us just, number one, how can people get a hold of you?
Best way to reach me is on Instagram. My IG is vic.heredia. It's vic.heredia.
All right. So with that said, guys, that's a wrap. So if you listen to this on iTunes, make sure you give us a 5-star review, leave a comment, or the review basically. You give us also you subscribe. If you're watching on YouTube, make sure you place a comment below here. Also, you hit that subscribe button, you hit that notification bell. And with that said, thank you, Victor.
Thank you.
And that's a wrap. Thank you very much.